Ladies and gentlemen, welcome to our annual general meeting for 2021, which I officially declare open. As you are aware, this meeting is being organized remotely in view of the public health considerations resulting from the COVID-19 pandemic. Present with me at this meeting are each of the directors of the company secretary, Mr. Carl Bartolo, CEO of the Medserv Group, and Mr. Noel Mitzi from KPMG, Malta, the auditors of the company. We will commence this meeting by explaining the procedures which will regulate it. During this meeting, each of the resolutions contained in the notice will be read out and a vote thereon will be taken, based on the voting preferences indicated by the members in their respective proxies. Where no such preference was indicated, then the vote of the chairman as proxy will be considered in determining whether the relevant resolution has passed or otherwise. I can confirm that I have received proxies by 82.725% of the shareholders in the company. As you are aware, members were also given the opportunity to ask any pertinent questions to the meeting, and each of these questions shall be answered during this meeting. It is important to point out that, as was recommended by the listing authority, the company met with the Malta Association of Small Shareholders to discuss the resolutions being tabled at today's meeting. I will now say a few words about the company's performance during the year 2020. Worldwide demand for oil has declined rapidly since the start of 2020, as governments closed businesses and restricted travel due to the COVID-19 pandemic. As a result, the oil and gas industry has been significantly affected by the macroeconomic uncertainty with regard to prices and unprecedented demand levels for hydrocarbons, leading to a historic market collapse in oil prices. Oil prices started to rebound in the second half of the year as production cuts by the Organization of the Petroleum Exporting Countries, OPEC, and partner countries known as OPEC+, and nations began to emerge from the national lockdowns. As the year progressed, optimism about the possible rollout of the COVID-19 vaccines contributed to the stabilization of oil prices. The financial performance of the group during the year was marked with the disruption brought about by the pandemic, which caused a number of offshore exploration projects planned for the year to be delayed to the second half of 2021. As a result, the group's integrated logistics support services segment, particularly the operations in Malta and Cyprus, were significantly impacted consequent to travel bans and closure of ports imposed by relevant governments. On the other hand, impact on the performance of the OCTG segment, which is driven by onshore drilling activity in the Middle East, was minimal in certain regions, as the national oil companies continued with their commitment to the approved projects, as well as to increase their production capabilities. The company has managed to preserve its liquidity through immediate action taken by management to adapt its cost base through lowering operation costs, as well as benefiting from several government benefits in response to COVID-19. This includes a €5 million financing granted under the COVID-19 guarantee scheme, offered by the Malta Development Bank. Notwithstanding the downturn in the oil and gas industry and project delays, the group has managed to secure a number of new contracts during the year, whilst renewing all its existing contracts across the group, including Malta and Cyprus. Following an international tender, the company has signed 3 new long-term contracts in Egypt, Malta, and Abu Dhabi. The investment that the group has put in place in its management systems during the past year is bearing positive results. Medserv has managed to spread its commercial relationships across 4 continents within the oil and gas service industry for its core competence. I now propose that we continue with our business for this morning and proceed to the first item on the agenda, and therefore ask the Company Secretary to inform the shareholders on the appointment of directors.
Appointment of directors. The company has had 7 vacancies for directors, and 7 valid nominations were received from each of Anthony J. Duncan, Anthony S. Diacono, Joseph Zamittabona, Carmelo known as Carl Bartolo, Lara Cassar, Etienne Borges Cardona, and Kevin Rapinette. Pursuant to the provisions of Article 55.3 of the Company's Articles of Associations, where there are as many nominations as there are vacancies on the board, then each person nominated is automatically appointed as director. Accordingly, no election for directors is required.
Thank you. We can move to the first resolution.
The first resolution is that the consolidated financial statements for the financial period ended 31 December 2020, the Directors and Auditors report thereon, be hereby received and approved.
Thank you. Can I now ask the Auditor to please read out the audit report?
Yes, of course. Thank you, Mr. Chairman. Dear shareholders, first of all, I hope you are all well and in good health. Due to the length of this report, I do not intend to read the full report, but would like to take you through the salient sections of our report, which you can find in the latter part of the annual report. I remind you that our opinion, which I shall be reading in a few moments, is based on international standards on auditing. In our report, you will find a detailed description of our responsibilities as the statutory external auditors of the company with respect to the issuance of an opinion on the separate and consolidated financial statements. As you are now accustomed to, the report incorporates a section entitled Key Audit Matters. We consider this section to be a very relevant section to you. The intention of this section is to provide the user of the financial statements with more insight into our audit focus and explains how we addressed the more important issues during the course of our audit engagements. The section does not in any way qualify our opinion or modify our report. The key audit matters cover the following areas: the impairment assessment of goodwill, property, plant and equipment and right of use relating to the Medserv subgroup, impairment assessments of investments and loans from subsidiaries, Medserv AGM and Medserv Eastern Mediterranean Limited, and deferred tax assets recoverability. Specifically for this year, I would like to clarify that with regards to the accounts for 2019, COVID was not determined to be a subsequent event which is an adjusting event, and therefore 19 does not reflect any adjustments, whereas on the other hand, the 2020 financial statements incorporates the impact of the pandemic on the performance of the group and the asset valuation, in particular in the areas referred to in the key audit matters. As auditors of the group, we also read the other information included in the annual report, including the Chairman's statement and the CEO's statement to the shareholders, and the Director's report, and consider whether these are materially inconsistent with the financial statements or our knowledge obtained during the course of the audit. The report continues by providing a detailed description of the responsibilities of the Directors and our responsibilities as the statutory external auditors of the company, which have not substantially changed from the prior year. In particular, you will find reference to the Director's report and our opinion thereon, outlining whether this report has been prepared in accordance with the Companies Act and the listing rules, and whether we have found any material misstatements within the report. And in this respect, and in our opinion, the Director's report has been prepared in accordance with the applicable legal requirements, and that no material misstatements have been identified. Our report also includes our opinion as to whether the company was in compliance with the Companies Act. To close off, I read our opinion, which states the following: that we have audited the financial statements of Medserv plc and of the group of which the company is the parent, which comprise the statements of financial position as at 31st December 2020, the statements of profit or loss and other comprehensive income, changes in equity and cash flows for the year then ended, and notes comprising significant accounting policies and other explanatory information. In our opinion, the accompanying financial statements give a true and fair view of the financial position of the company and the group as at 31st December 2020 and of their financial performance and the cash flows for the year then ended in accordance with international financial reporting standards as adopted by the EU, and have been properly prepared in accordance with the Companies Act 1995 and additionally specifically in relation to those of the group with the requirements of Article 4 of the regulation on the application of IFRS as adopted by the EU. Thank you.
Thank you, Mr. Mitzi. I think we can now move and invite Carl Bartolo, our CEO, to deliver his presentation on the 2020 financial statements. Carl.
Thank you, Mr. Chairman. I'll just be giving a few highlights from the annual audited financial statements. So the group's turnover for the year amounted to 32.4 million compared to 68.7 million registered in 2019, representing a decrease in turnover of 36.3 million, equivalent to a 53% decrease. The group's performance in 2019 was improved by the nearshore drilling project in Suriname, which started and ended in 2019. Revenue generated by the subsidiary in Suriname during 2019 amounted to 30.5 million, which corresponds to 84% of the decrease in the group's turnover in 2020. The remaining decrease in turnover is attributable to the missed revenue as a result of the rescheduled projects originally planned for 2020. As a result, the ILSS segment reported a decrease in revenue of 35.6 million, representing a decrease of 68% over the previous year. The OCDG segment has also registered a decrease in revenue of 695,000, which is equivalent to 4% decrease when compared with last year. The adjusted earnings before interest, tax, depreciation and amortization, known as EBITDA of the group, amounted to 5.6 million, a decrease of 56% when compared with the 12.7 million generated in 2019. While the OCDG segment has maintained the overall improvement registered in 2019, registering an increase in EBITDA of 34% over 2019, the ILSS segment registered a decrease in EBITDA of 8.4 million, of which 2.3 million is attributable to the project in Suriname and as a result of project rescheduling and delay. After recognizing depreciation amounting to 7.9 million as against 7.8 million in 2019, amortization amounting to 1.8 million, similar registered amount for 2019, and a net provision for impairment losses on property, plant and equipment amounting to 1.2 million, and no impairment for 2019, and provision on impairment losses on machine shop license in the UAE amounting to 177,000, the group generated an operating loss amounting to 5.5 million. 2019, the group registered a profit of 3 million. After deducting the net finance cost amounting to 4 million in 2020 as against 5.6 million in 2019, the group registered a loss of 9.5 million as against 2.5 million in 2019. Loss after accounting for taxation amounted to 8.8 million as against 3.3 in 2019. However, the cash generated from operations remained stable across the entire group, and during the year it amounted to 10.1 million as against 8.7 million in 2019. This improvement is mainly as a result of the working capital movements following the receipts from trade debtors in 2020 in relation to the amounts outstanding at the end of 2019, coupled with a lower receivable balance at year-end in view of the reduced activity within the ILSS segment. This has allowed the group to maintain its investment throughout the year, enabling the group to meet demand and new opportunities. I will now be highlighting a few financial key performance indicators. So the EBITDA margin for 2020 was 17.17% as against 18.51% in 2019. The interest coverage ratio was 1.39 as against 2.25 in 2019. For 2020, the net debt to EBITDA amounted to a ratio of 9.43 as against 4.27 in 2019. Debt to equity ratio stood at 13.31 as against 3.9 in 2019. The earnings per share amounted to a loss of 15.5 cents as against 5 cents in 2019. And the average number of the employees within the group at the end of 2020 amounted to 395 as against 304 in 2019. The financial position of the group as at 31st December and the equity position amounted to 5.3 as against 14.8 million in 2019. A few words about the outlook, since given the opportunity. So, although the oil and gas industry is going through a challenging period, an upside exists for those companies that will survive this challenge. Oil prices are expected to recover as demand rebounds on the back of anticipated global economic recovery, combined with the ongoing petroleum supply limitations by the OPEC and the COVID-19 vaccination rates. The recovery is expected to be gradual. Various energy research firms are predicting both the offshore drilling activity as well as the global oil demand to recover in the second half of 2021, with oil prices predicted to rise. Looking further ahead, various project forecasts predict oil prices and global drilling activity to improve further within the next 5 years. With regards to Medserv and in respect of the ILSS segment, so the shore-based activity, which mainly consists of Malta for Libya, Egypt, Cyprus and Suriname, services and offshore oil and gas projects are expected to resume in these geographies by the end of this year. During the year, the company has secured the renewal of its contracts with major players operating offshore Libya for the coming 3 to 4 years, as well as a new contract for the transportation of goods and drilling-related equipment from global sites to specific locations in onshore Libya, using the company's facilities in Malta as a logistic hub. The mega development project for the installation of production platforms offshore Libya is on track to commence late in 2022. The subsidiary in Malta will be acting as the logistical base for the development of this project for the offshore Libyan gas field. The planned drilling projects offshore Cyprus were postponed to the second half of 2021 as a result of the travel bans and closure of ports imposed by governments in 2020. The earnings from the drilling campaign in Suriname were originally forecasted to be recovered from the drilling projects in Cyprus that were scheduled to commence at the end of the first quarter of 2020. Despite the Suriname drilling campaign terminating at the end of 2019, the company is committed to maintain its presence in South America and the Caribbean region, as has therefore resized its setup to minimize its operating costs. The large finds in Guyana, Trinidad and Tobago, as well as the recent discoveries and further planned activity in Suriname, make the region an exciting growth area for the oil and gas industry. Drilling and project development in Egypt remain ongoing and is expected to improve further in 2021 following the successful award of a new contract in Egypt for the provision of material and warehouse management services. The company continues to scout for tenders in Egypt to be rolled out by other IOCs within the company's core competencies. The company is keen to increase its participation in this significant growing energy market, especially given its proven in-country track record to date. The supply chain management of OCTG segment has continued to improve further. Oman remains the overall consistent contributor to date within the group. The securing of the new contract in Abu Dhabi for supply chain management, announced on 14th October 2020, has allowed the UAE business unit to improve its performance. However, its machine shop volumes remain down as a result of the pandemic. The company still enjoys a strong business pipeline across its core markets, being North Africa, Eastern Mediterranean, and the Middle East. As the rollout of the COVID-19 vaccination program continues worldwide, the long-term energy projects for which the group is already contracted will resume. The cost of commercializing these projects is relatively low, as the investment in the required infrastructure has already been made by the IOCs, the international oil companies. Furthermore, such projects are located close to the market or are needed for national consumption. That's it. Thank you, Mr. Chairman.
Thank you for that, Carl. As stated above, shareholders were given the opportunity to ask questions on all related to the resolutions being tabled. I can confirm that no questions were submitted in respect of this particular resolution. So now I ask the Company Secretary to notify the meeting of the number of proxies where a voting preference was indicated and the number of proxies where no voting preferences were indicated.
So the chairman has received the following proxies in respect of this resolution. We have 46.9% of all shareholders who are represented at this meeting through proxies have voted in favour of this resolution. 45.4% of all shareholders represented at this meeting have requested the chairman to vote as he wishes. 7.6% of all shareholders represented at this meeting have abstained, and there were no proxies indicating a vote against this resolution.
Thank you. I confirm that I vote in favour of this resolution, and accordingly 92.362% of all shareholders represented at this meeting have voted in favour of this resolution and declared that the resolution has been approved and duly carried, and asked the Company Secretary to now proceed to the second resolution.
That the appointment of KPMG as auditors of the company be hereby approved, and that the Board of Directors be hereby authorised to fix their remuneration.
I can confirm no questions were submitted in respect of this resolution. I now ask the Company Secretary to notify the meeting of the number of proxies where a voting preference was indicated and the number of proxies where no voting preference was indicated.
So the chairman has received the following proxies. 45.435% of all shareholders represented at this meeting have voted in favour. 46.927 have not indicated a voting preference. 7.638 have abstained, and there were no votes against this resolution.
Thank you. I confirm that I vote in favour of this resolution, and accordingly 92.362 of all shareholders represented at this meeting have voted in favour of this resolution and declare that the resolution has been approved and duly carried, and ask the Company Secretary to proceed with the third resolution.
That the remuneration report published as part of the annual report be and is hereby approved.
Again, I can confirm that no questions were submitted in respect of this resolution. I will remind the shareholders that this resolution is an advisory advisory vote, meaning that the vote is not a binding vote, but gives the opportunity to express their views on the matter. I now ask the Company Secretary to notify the meeting of the number of proxies where a voting preference was indicating and the number of proxies where no voting preference was indicated.
So the chairman has received the following proxies. It is 45.3% of all shareholders represented at this meeting have voted in favour. 46.927 have not indicated a voting preference. 7.762 of all shareholders have abstained, and 0.009% of all shareholders represented at this meeting have voted against this resolution.
Thank you. I confirm that I vote in favour of this resolution, and accordingly 92.229 of all shareholders represented at this meeting have voted in favour of this resolution, and declare that the advisory resolution has been approved and duly carried, and ask the Company Secretary to proceed with the fourth. resolution.
So, subject to the completion of all conditions precedent as set out in the share purchase agreement dated 12th April 2021, entered into by and between the company, that is Medserv plc, Abacus Seychelles Limited, acting as trustee and in representation of the DOC Trust, a trust created and existing under the laws of the Seychelles, Abacus Seychelles Limited, acting as trustee and in representation of the Seeger Trust, a trust created and existing under the laws of Seychelles, Sapphire Utilis Corporate and Trust Services Limited, acting as trustee and in representation of the Renaissance Trust, a trust created and validly existing under the laws of Mauritius, DOCOP Limited, a company incorporated in Mauritius with company number 1788883, with registered office at Oak Management Mauritius Limited, first floor, Block B, Rousseau Creole Complex, La Mivois, that's correct, Black River 90625 Mauritius. David O'Connor and Olivier Bernard to approve the acquisition by the company of 77,090,000 shares, so that is 77,090,000 shares, the Regis shares, in the capital of Regis Holdings Limited, a company incorporated in Mauritius with registration number 120300 and whose registered office is situated at first floor, Block B, Rousseau Creole Complex, Black River 90625, Mauritius, that is Regis, and constituting the entire issued share capital of Regis from DOCOP, and to approve the issuance and allotment without offering first the same to the existing shareholders in proportion to their current holdings of 47,893,229 ordinary shares in the company with a nominal value of 10 euro cents and with a share premium value of 58 euro cents per share, that is the Medserv shares, in favour of DOCOP, in consideration of the acquisition of the Regis shares, and to authorise the directors to carry out any transaction and execute any document required or advisable pursuant to the above, including the application for listing of the Medserv shares with the listing authority.
Thank you. The purpose of this resolution, as set out in the circular, the shareholder circular, is to enable the fulfilment of the share exchange with Regis Holdings Limited and its shareholders. May I remind shareholders that this matter constitutes special business and which requires an ordinary resolution in favour of the amendment. At this point, I would like to turn to the questions received by the company in respect of this resolution, and I ask the Secretary to read the questions and we will provide the answers to this meeting.
Okay, so the first question received in respect of this resolution relates to the recent insurgency in Mozambique, and the question is whether that has had a negative impact on the business operations of Regis Holdings Limited and how this could affect the overall financial position of the company.
Thank you. Yes, the Mozambique situation has affected, but we would like to remind the meeting that the Mozambique business unit has assets totaling 7 million, which will equate to 4% of the total assets of the company. Risks in relation to Mozambique exist, but every business business project has its inherent risks. Our assessment is that the Total contract will not be cancelled, but will be temporarily postponed until the security situation in the country improves. Total has unrivaled experience when it comes to projects in Africa. Medserv too has experience in operating in challenging environments, such as Iraq and Libya. So the risks of operating in Mozambique and Uganda, for that matter, are of a similar nature to those we currently encounter in other jurisdictions of our operations. The fact that we are increasing our geographical footprint allows Medserv to spread its risk levels as well as to increase the client portfolio and service offering.
So the second question relates to the circular and is in respect of the financial projections for 2021 and 2022. And the point being made here is that the EBITDA contributions of Regis were not split by the different geographical units, and the question is whether it is possible to publish this information so that the shareholders will have a better understanding of the EBITDA contributions of Mozambique, Angola, Uganda and South Africa for the next 6 months and for 2022. A similar question related to a request for the company to provide a breakdown of EBITDA per geographical unit, including Regis.
The forecasts prepared by management stipulate that 25% of the total EBITDA registered by Medserv Regis will be derived from the sub-Saharan region. Regis recognized group.
Really?
Additionally, the company forecasts that the EBITDA for the next 4 to 5 years will be generated as to 50% from ILSS Mediterranean Basin, 25% from OCTG Middle East, and 25% from Regis Sub-Saharan region.
Another question is whether Medserv Regis ought to consider publishing updated financial forecasts annually.
The company does have an obligation to publish annual financial forecasts within 2 months of the publication of the audited financial statements. This requirement is a reporting obligation arising from the 20 million bond issue. The company intends issuing the next forecast by the 30th of June 21, which forecasts will form part of the financial analysis summary document.
The fourth question relates to Regis Holdings Limited and its involvement in the building of roads and flyovers, especially in Uganda. Is this non-oil and gas sector going to be replicated in other countries?
Regis Holding Limited's main experience is in the provision of logistics, transportation and equipment. It is not involved in the building of roads or flyovers. However, it does provide logistics support services to other industries apart from the oil and gas sector. One example is the provision of significant equipment and manpower to the mining industry in Mozambique.
Okay, the fifth question relates to whether Medserv Regis is going to participate in significant upcoming logistics contracts in Africa, especially the building of the crude oil pipelines between Uganda and Tanzania or Angola and Zambia.
Yes, both Medserv and Regis have individually participated in a tender for the provision of logistics support, that is the lifting, handling of equipment and manpower services and machine shop services to Valorec, who are the suppliers of the line pipe to Total in Uganda. This 1,440-kilometre crude pipeline from Uganda's Albertine region to Tanzania's seaport of Tanga will be the longest electrically heated pipeline in the world and is budgeted to cost $3.6 billion to develop. Medserv and Regis have now joined forces on this tender and is in advanced discussion with Valorec to be engaged on this project. But as yet, the award has not been contracted.
The last dividend that Medserv plc distributed to its shareholders was in December 2015, before the rights issue offer at a price of €1.50 per share. Since then, the price of the shares decreased further and today is trading at 83 cents per share. Obviously, that is the date at which the question was received by the company. After the merger, the retained earnings of Medserv Regis would amount to €31.4 million and cash balances to €16.6 million. And the question is whether there is a possibility that a bonus issue and a cash dividend would be distributed to the shareholders. And if we received a similar question as to what the company's dividend policy will be.
Thank you. No decision has been taken with respect to the declaration of a dividend. However, it will be considered by the board in due course. The present dividend policy of the company is set out in the prospectus of the 14th December 2015, which states that, subject to available cash flows, the requirements of the Act and sufficient working capital, 40% of the distributable profits would be distributed. This may be revised following the completion of the transaction to consider the realities and market requirements of the group, and will be communicated to the market accordingly.
So the seventh question relates to the call option, and this is asking whether in the event of an exercise of the call option, the current shareholders of Regis will become bound to launch a mandatory bid to all shareholders. Does this mean that Medserv Regis would be delisted from the Motor Stock Exchange?
In the event that DOCOP exercises the call option, then it would be obliged to offer a mandatory bid pursuant to the listing rules related to takeovers. However, this would not necessarily mean that Medserv Regis plc would be delisted. They would have the option to do so if they were to acquire 90% of the shareholding in the company and exercise their option to acquire the balance of the shares from the shareholders, if they wanted to propose that to the shareholders of the company in a general meeting. In essence, the exercise of the call option does not, as of itself, imply a delisting of the company.
Do you expect growth in earnings of the sub-Saharan region, that is the Regis operating region?
Yes, we do. The company believes that the integration of Medserv Regis and projects scheduled to take place in the sub-Saharan region will result in growth, earnings within this region.
And the question is on the valuation and how this of the Regis Group and how this was carried out and determined. We
received the valuations from the management of Regis, but we had KPMG prepare a Section 73 report confirming that the value of Regis is at least equivalent to the nominal value and share premium of the Medserv shares being issued to DOCOP Limited.
The 10th question relates to what factors will contribute to the turning of the group from losses to profits.
The action is considered, actually it's a two-pronged approach, a reduction in costs of finance and a reduction in head office costs and economies of scale efficiencies.
Who will the senior executives of management comprise?
It is expected that Dave O'Connor will become the CEO, supported by two deputy CEOs, these being Olivier Bernard and Carl Bachtiger. Olivier will be primarily responsible for finance, IT and related matters, whilst Carl for business and group operations. I think that's the last question.
Yeah.
Thank you, Lara. So now I would like to turn our attention to the recent press article in relation to alleged wrongdoing or associations with wrongdoing by Regis, Dave O'Connor and/or Olivier Bernard. As you are aware, the company reacted immediately after reviewing such press report and engaged in discussion with its counterparts to obtain their responses. The company will take this opportunity to reiterate the following points. 1. It is important to clarify that the company's quote to the Lovin Malta article stating the benefits outweigh the risks was in reference to the geographical risk associated with an investment in Africa and not in relation to any wrongdoing by Regis or its shareholders. Indeed, at no point in time was the company made aware of any such allegations before the publication of the article. 2. The company confirms that it has actively engaged with the Regis shareholders on the said allegations and who have provided comfort to the board that the said allegations are devoid of any truth, at least insofar as Regis and its shareholders are concerned. 3. The company has carried out a due diligence on Regis and also on its shareholders, and at no point in time did anything of substance result from its findings. 4. The Regis shareholders have confirmed their willingness to provide any information and documentation to the company to evidence their integrity. 5. This transaction is still ongoing, since there are still a number of outstanding conditions which are to be fulfilled by Regis. However, assuming that they are completed within the time frame established in the contract, the directors are confident that this transaction is in the company's best interest and continue to recommend its adoption to the shareholders. I will now move to ask the Company Secretary to provide an overview on the proxies received in relation to this resolution.
So the company has received the following proxies. 45.392% of all shareholders represented at this meeting have voted in favour. 46.927% of all shareholders represented at this meeting have not indicated a voting preference. 7.672% of all shareholders represented at this meeting have abstained, and 0.009% of all shareholders represented at this meeting have voted against this resolution.
Thank you. I can now confirm that I vote in favour of this resolution, and accordingly 92.319% of all shareholders represented at this meeting have voted in favour of this resolution and declared that the resolution has been approved and fully carried, and ask the Company Secretary to proceed with the 5th resolution.
So, subject to the completion of all conditions precedent as set out in the share purchase agreement dated 12th April 2021 above described, to change the name of the company from Medserv plc to Medserv Regis plc, and to update the memorandum on articles of association of the company accordingly, to increase the number of directors on the board of directors of the company from 7 to 8, and thus delete clause 6 of the memorandum of association and replace it with the following. The board of directors of the company shall consist of not less than 2 and not more than 8 directors, of which at least 3 shall be non-executive directors.
Thank you. The purpose of this resolution, as set out in the shareholder circular, is to make certain changes to the company following the completion of the above described share-for-share exchange, namely the change in name of the company to Medserv Regis plc and the increase in board capacity. I must remind shareholders that this matter constitutes special business and which requires an extraordinary resolution in favour of the amendment. No questions were received on this resolution, so I think we can now pass immediately to the vote, and would ask the Company Secretary to provide a synopsis of the voting preference received.
So the Chairman has received the following proxies. 45.392% of all shareholders represented at this meeting have voted in favour. 46.927% of all shareholders represented at this meeting have not indicated a voting preference. 7.672% of all shareholders represented at this meeting have abstained, and 0.009% of all shareholders have voted against this resolution.
Thank you, Lara. I confirm to the meeting that I vote in favour of this resolution. In view of this resolution being an extraordinary resolution, the required majorities for the approval of the resolution are 75% of all shareholders represented at the meeting and 51% of all the shareholders entitled to attend and vote on the meeting. Accordingly, 92.319% of all shareholders represented at this meeting and 76.522% of all voting shareholders in the company have voted in favour of this resolution, and therefore I declare that the resolution has been approved and duly carried. At this point, I think all that is left for us to do is to close the meeting, as this meeting has now been concluded. On behalf of all my directors, I thank all shareholders for your support and this particular attendance and participation in this not so normal meeting due to the pandemic restrictions. I hope that next year we can meet again in person. In the meantime, I thank you again and hope you all stay safe. Thank you very much.